Today, we're going to talk about DraftKings stock. And the way that these things usually work is that we'll find a stock we want to cover, we'll assign it to an analyst, and they'll write a research piece, usually based on a day's worth of research. Then we'll go ahead and take that research piece and use it to produce a video. And I put together this slide deck on the plane last night, and that was based on the research the analyst did and some of my own research. And prior to beginning the recording of this video, I took a quick look at the share price, or the market cap rather, to calculate the simple valuation ratio, which is quite low. It's about 2.5. And I noticed that the stock had crashed significantly. So it looks like the drop is about 28%. This is on the back of their recent earnings. And this presentation is going to help explain that drop, but at a more strategic level. So you may be wondering, if you're a regular reader, why we're even covering this stock. And it's what they call a sin stock. And we have covered sin stocks before. We look at 11 categories of tech investing and cannabis. The reason we started covering cannabis is that there was an extreme level of interest from newbie investors. This was, 4 or 5 years ago, and that allowed us to get in front of a lot of people that didn't have any investment experience and could use a bit of guidance. And we also have extensive experience in the cannabis market. There's a large potential opportunity there in the United States, about $100 billion of black market market share that needs to be displaced. But there's been a certain degree of suspicion from institutions because cannabis remains illegal at a federal level in the United States. Now, when it comes to gambling, there's a lot of investor interest in this particular stock based on our SEO tools, and that's probably because people are very familiar with the thesis. More so, a bullish outlook from ARK Invest, the world's largest disruptive tech investor, adds to that. There's a conversation to be had here around whether or not this particular activity adds any value at all to society. You could make the same argument for cannabis, but I think that's an entirely different conversation. The reason that we wanted to look at DraftKings was because ARK Invest includes that company in their top 20 positions. We've never looked at it before. Here you can see, I just pulled this from ARK's website. It's their flagship ETF. We see DraftKings there. And what about position 15, 16? So we wanted to take a closer look at what sort of opportunity DraftKings is addressing. And you'll see the acronyms used: OSB, online sports betting, and iGaming. And here's a metric from Statista that shows the total gross gaming revenue in the United States. This is comprised of slot, table games, sports betting, and iGaming. So this is the total opportunity. And of that, there's a component that DraftKings focuses on. And what's interesting about this chart is you can see this dramatic drop in 2020 where people tightened up their purse strings. And then in 2021, they got back to their usual punting. But it's rather interesting how volatile this total addressable market is. It's certainly not very consistent. And when we look at how DraftKings looks at their own opportunity, there's some suspicious numbers here. So they think the implied total addressable market for the US for legalized online sports betting is around $26 billion. And then iGaming, and I'm not going to go into what that is, but you can think of things like slot machines that might fit characteristics of iGames. Any game where this is different from in-game purchases, where you see companies like Unity offering an opportunity there. This is falls into the gambling segment, although you could argue both are gambling. But the implied opportunity from just these two components, remember we looked at the previous chart that also included slots and table games. This is only those two components, OSB and iGaming, and they're saying that's a $74 billion opportunity minus slots and table games. Hard to believe. And then they list out their market share here, and they talk about how they're on track to achieve $6.7 billion to $9.5 billion in revenues. Well, if we look at what they're doing last year, at least what they did last year, it's $1.3 billion. They're on track, I think, this year to hit $2.2 billion. So on the lower end of that larger guidance they gave, they're about a third of the way there. Now, the concerns that we have about their business, first of all, when you look at the last 6 months, or say the first 6 months of 2022, there's the revenue, okay, $883 million on $824 million in losses. So you can calculate the gross margin first. You can see that's falling over time. They just had earnings today. I think it came in at 27.5%. That's not what good when your gross margin is falling over time. You want that to expand. The significance of the gross margin is that once you clear up your overhead, that you can start to realize a profit. And here you could see they're spending a massive amount of money, almost as much as the cost of revenue on sales and marketing. So there's a bit of suspicion there. Are they spending $1.50 to get $1 in revenues? Their plan is that they're spending a lot of money up front to capture market share, and that they're going to harvest the rewards down the road. Well, when the gross margin continues to fall, that's a concern, and they need to survive until they can do that. They have $1.5 billion in cash on their books. Net that out with $1.2 billion in debt, and they have about $300 million. Some of the concerns raised today by investors appear to be that they're continuing that burn rate, and there's concerns they may not to be able to rein that in when they need to. Now, the reason that companies spend so much money on sales and marketing is that they want to establish a leadership position. And when we consider iGaming, you can see here this one data source says that DraftKings isn't the leader, but there are 3 leaders emerging from the pack. And that seems to mesh well with what DraftKings is telling us. So here you see FanDuel claims to have 46%, DraftKings 20%. So whether or not that's the case, when we look at what DraftKings tells us, they're the largest operator when you consider the total number of states that they're operating in. And then when we look across those states, you can see that the top 3 operators command, let's say, 80% on average or upwards of that in market share for each of these states. So for all practical purposes, we can consider DraftKings to be a leader. Whether or not that's the case, it doesn't matter, because this isn't a company we would invest in. When you look at their keys to a unique and sustainable differentiation, they talk about their marketing machine that they're spending a lot of money on. And when you dive into their investor deck, it's extremely complicated. There's a lot of acronyms in there. There's a lot of metrics, as there should be, but this is not an easy company to follow. And ultimately, they're hoping to expand in a market where there's an increased legalization for sports betting that took place not too long ago in the United States, and they're hoping to reap rewards from that, but we're just not convinced that's the case. And I didn't even crack this open. This is a big red flag in itself. I think this is who knows how many pages long of accusations about this SPAC. There's another red flag. This company went to market as a SPAC, and this was back when they were a $21 billion firm. Now they are about a quarter of that, with a market cap of $5 billion last time I looked. But this was published last year, and it makes certain accusations. This is Hindenburg. They're a short seller. They have a vested interest in talking smack about companies that they're short on. So take it with a grain of salt. Whenever we come across these short reports, we usually just gloss through them very quickly. I didn't even break this one open. But if you're an investor in DraftKings, you ought to read this through. And I'll bet if just 10% of that was true, the accusations they're making, including things like the company's involved with the mob, if just a small fraction of that is true, you don't want to be holding this company. So DraftKings represents a very questionable opportunity from our perspective. The company seems to be overselling that. Their gross margin is declining over time. It's currently at 30%. There's a very strong marketing spend there that they need to rein in, and we'll see if growth stalls alongside of that. And they're trying to sell this big data AI opportunity that will grow on the back of increased gambling spend in the United States. So there's no international revenue exposure there. This isn't something we would be interested in at all, whether the stock fell 27% today or not. We wouldn't touch this thing with a 10-foot pole. So please put your comments in the comment section. Make sure to subscribe to our channel. Thanks for taking the time to watch this today.